My name is Will, and I've withdrawn millions of dollars worth of profits from my scalping accounts over the years, and today I want to go over and offer a new perspective on very common ways of thinking that many traders have that I happen to disagree with. Now, I believe that this perspective that I'm going to share today has not only helped me dramatically, I believe that it's helped me break through many limitations that most traders reach in their career. I think that it also has the opportunity to open your mind a little bit to the different ways of trading and potentially help you in quite a big way. So, these are the common ways of thinking that I disagree with. First and foremost, high risk to reward trades will necessarily have a lower win rate. Bad grammar on my end. Oh well, I'm going to leave it there. High risk to reward trades will necessarily have a lower win rate. Now, most people believe that very infrequently you could find very high risk to reward trades that will not have a lower win rate. However, for the most part, if you tell somebody I take 5 trades a day and all of them have the potential for very high risk to reward and all of them have a high win rate, they are going to look at you like you are insane. So, put that in the back of your mind for a second. The second common way of thinking that I disagree with is that it is not feasible to frequently have high risk to reward and a high win rate. So a lot of people say, again, if you're going to have frequent high risk to reward trades, there's no way you're doing that with a high win rate. You have to make a sacrifice of win rate. Okay, put that in the back. We should optimize the probabilities of a setup winning, not its risk to reward. So this kind of goes off the back of the other ones, but it's saying, okay, well, if getting a bigger risk reward is making our win rate go way down, then we should actually just optimize for the win rate of the setup and kind of forget about the risk reward. And this is where you see many traders running things like a 50% win rate, 2 risk to reward setup, for example, which can work, but it's kind of limiting. You're not going to do 60, 100, 200 months like that. And the reason I'm qualified to talk about those kind of months is because I do 60, 100, 150, 200 months consistently. And I've done so for years in a live trading call where every single trade was traded live in a Discord call. If you want to be a part of that, join my Discord. Now, the perspective that I'm going to give today can be applied to any way of trading. So I don't care if you trade like me or you do not trade like me. This way of thinking, I think, can potentially open up anybody's mind. So what I think a lot of people have failed to account for is break evens. Now, most people know break evens for just what they are. You go break even, the trade break evens, that's it. It saved you from a loss. But there's hidden benefit to break evens that is not understandable on the surface level. And that's what we're going to talk about today. That dispels all of those common beliefs. And actually, with the power of break evens, if used correctly, you can have ultra high win rate, ultra high risk to reward positions very frequently. And I'm going to show you the mindset and the way of thinking that allows that. I do not care about the setup I'm taking's win rate at all. I only care about the probabilities I can at least get break even on that position. Okay, so put that statement in the back. And right away, we need to first go over kind of the rudimentary way I trade, how I get break even, and the types of entries that I particularly get so that you could have a perspective and context as to what I'm talking about in this video. Okay, so this represents a type of entry that I might take. Now, there's other qualifications for my particular entries, but at the very basic level, I'm always going to need a high time frame level like this. Let's say price comes down and tests that high time frame level. For me personally, I'm never entering on that first test, and the reason is because I'll have to have a bigger stop loss, probably underneath the prior swing low or something of that nature. What I will usually do is if this rejects the level, for example, a type of entry, this is not the only type of entry, I take many different types of entries that I could potentially take to optimize my stop loss to be quite small, is taking this retest of that high time frame level with a stop loss right underneath that low. This typically gives me the tightest stop loss which optimizes the risk to reward of this setup. which is what I'm aiming for generally. But what I'm really aiming for is the probabilities to go break even. So how do I go break even? Well, for the most part, imagine this candle just came down and tested. If it pushes up, if it tested my entry perfectly, I'm break even immediately. If it goes into profit, I'm going to get break even almost immediately. Okay? Again, I'm not saying you should do this. I'm just setting up context to provide you with the perspective that I believe has allowed me to break through almost all limitations that most traders run into at some point in their career. Okay? Or let's say that this actually falls down. It gets close to my stop loss. And price is like right here. It hasn't quite hit my stop loss. And then it pushes up like this. Well, basically, once it goes decently away from my entry at all, basically if it moves away from my entry at all, I'm getting break even as quick as I possibly can. Now, the obvious trade-offs of this and doing things this way is that, yes, when price does expand, I am going to make a huge amount of risk to reward. And that's why my average winning trade is over 7R. Okay? And a lot of my trades are 10, 15, 20R in my winnings. And that is not an uncommon position for me. I actually take those types of trades very frequently. You might be wondering, how is that even possible? Now, the trade-offs for going break-even, however, is that a lot of times you might get break-even on trades that would have been very good. Okay? We could imagine this situation where you get filled right there, and then price just ticks below that candle's low, then you're break-even, and then this thing becomes the biggest candle you've ever seen, and it just runs forever. That's okay. Every single thing in your trading is going to have trade-offs, including break-evens. And break-evens trade-offs are very annoying sometimes, because if you go break-even like this, guess what? You are going to go break-even on a lot of good trades. A lot of them. But you have to be okay and willing to deal with that trade-off if you want to be able to take very high risk-to-reward trades with very high win rate. And let me tell you what I mean. So let's take this particular setup. Obviously, this is just a random setup, but let's say you have setup A, which has a 20% success rate to expand from here to here. Okay, and where you would generally enter is right here with a stop loss underneath, and the success rate of this expansion, let's just say it expands 20% of the time. Me and you both can agree that is low. Okay, that's a quite low expansion rate. However, let's say that the chance price moves up at all from this level and offers you an opportunity to go break even, that chance is 70%. Okay? And just stay along with me. So the chance that you get any bounce off your entry is 70%. Okay? And this setup shows up all the time. So the actual success rate of the expansion is only 20%. But the chance that you can at least get break even on your entry is 70%. You no longer have a 20% success rate setup. This trade might offer you 15R. Now you have a 70% win rate 15R setup because you went break even. Okay? If you just leave your stop there, you're going to lose 80% of the time. But if in all the times that it allows you to go break even, you actually go break even, now you have a 70% win rate, which is the rate that you can go break even. And the reason your win rate changes to 70% is because now, most of the time, you're just going to go break even. That's not a loss. A break even isn't a loss or a win. So if you take this trade over and over and over and over again, you subtract the break evens, this trade all of a sudden just has a 70% win rate for 15R. Now you have some of the best stats of any trader on earth. Not even lying. If you can actually have a 70% win rate on positions with a 15 or 10 or even like 8R average, you are absolutely extraordinary as a day trader. And you can make tens of millions of dollars in this market if you do that. So basically what I'm saying here is with the power of break evens, you can have high, extremely high win rates with very high risk reward. And the trade-off to this is that now trading becomes a very different game. Trading becomes a very different game when you start to think about the markets like this. And it opens up a huge amount of opportunities that have never been there. Okay, now put yourself in my shoes. You're a trader whose primary focus for entries is to optimize for break-evens, okay? Your primary goal as a trader, that's the most scuffed E that's ever existed. Your primary goal as a trader that is finding entries on a day-to-day basis is to optimize for break-evens. Okay, optimize your entries for break-evens. So you don't necessarily care about the setup success rate. In fact, you're borderline not even really looking for setups. You should still have setups, okay? You should still have setups, but you should have entry setups that are highly likely to even allow you to go break even. So put yourself in my mind for a second. When I sit down in the market, I say there's a plethora of opportunities in the market on a day-to-day basis. Okay, you have moves all day long, literally all day, every single way possible. Okay, this is the market. When I sit down and look at this market, I might say I believe that there's a 30% chance that you expand from this level down here up into this level. By all metrics, that is a bad setup. If I was just to take this here with a relatively big stop and go for like a 2-to-1 risk reward, yes, over a long period of time, that can be profitable, but it can't be immensely profitable to the tune of 150, 60, 100, 150, $200 a month. But if I then scope out a entry after you have held that high time frame level, for example, where I could get a very tight stop loss, where I have done the testing and I understand which types of entries give me a very high probability of moving to break even at the very least, so this run has a 30% chance, then I can take this and I can just void this idea of it being 30%, and I can say, no, I actually have an 80% chance of going break even. So that means all of a sudden I have the opportunity and the potential to capture this whole run that's only going to happen 30% of the time for an 80% win rate. Because if I could optimize to go break even 80% of the time, and basically what I mean when I say that is that you're not going to go break even on 80% of the trades that you take, but 80% of the positions that you get in on, you can at least move your stop to break even. I don't really care if the trade wins or loses. That break even percentage is 80% of these trades that you at least execute on, you can move your stop to break even if you want to. Now, all of a sudden, you have a huge range of potential movement with an 80% win rate and a very tight stop loss. You have the fucking golden ticket of trading. You have the cheat code all of a sudden. You have been able to fucking hack the market, okay? Because now you have ultra high win rate, ultra high risk reward, which is like a fucking legendary Pokemon card in the trading scene, bro. Nobody does that. Nobody understands that, and it's because people have this limiting belief that you can't have high risk reward with a high win rate. And the key to it all is utilizing break-evens to the best of your ability. So this mantra that I hear people say all the time of, oh, I'm only going to take all A+ setups, bullshit. That's okay. If you want to be a fucking mediocre trader at best forever, go for it. Only take A+ setups. What dictates an A+ setup for you, though? This is the point of contention here that I have a huge problem with. What dictates an A+ setup should be, well, usually what dictates an A+ setup is this has a very high win rate. I know I'm going to win this trade 70% of the time. But you have to think deeper. What is the chance of the projected move that you have for the market? What is the chance that price is going to go from $2 to $10? What is that chance in your head? If you understand, or not even in your head, what is that chance in general? If that setup, if that projected price move has a 30% chance of happening, okay, and if you use a big stop, you're only going to get 2R, okay, that's a mediocre trade, or you're only going to get 3R, that's a mediocre trade. Over a long period of time, you might be able to make profits with that. If you're able to optimize your entry to a point where you could get very small stops and a very high likelihood of going break even, let's say 70%, now that trade is a 70% win rate, fucking huge expansion that you can make a hell of a lot of R on. So when I look at what's an A plus idea to play, I'm not looking at the success rate of the actual overall setup. And here's the thing. Most of the setups I trade have a very high success rate of that expansion even happening. But because I'm optimizing for very tight stop losses, each individual entry that I take has a much lower success rate than the overarching setup in the market. Okay, so if I could pinpoint each of those entries and optimize those specific entries to, potentially have a very low success rate of actually following through to the overarching higher success rate setup, if I could optimize those to have very tight stop losses and optimize them to where I know that there's a highly likelihood of going break even, then I could have a very high win rate, extremely high risk to reward setup with a very high likelihood of expanding, because the overarching setup is a high likelihood of expanding. So the perspective that I'm giving you is stop trying. Well, for me, the way I managed to consistently do at least 60R months, and even this week I've made 100R trading. 100R. 100. All live, in call. I'm not fucking lying. Go to my Discord. Ask anybody in those calls. The stuff that I'm saying is not just bullshit. The way that I have this perspective is I don't give into those limiting beliefs that high win rate and high risk reward cannot coexist. This is how I structure my trading. I want a overall, overarching, this big box is overarching, this circle is overarching, a setup that's going to give me a high probability of a expansion from one point to another point, okay? This is why I focus on time of day. I'm looking for highly probable expansions. This is why I have things like PDR. It gives me highly probable expansive points. This is why I don't trade in chop, because I'm looking for big expansive moves. And then I optimize my stop loss to fucking hell and back. If you've seen my YouTube shorts, I have the tiniest stop losses you've ever seen. And each of those individual positions on their own have a high chance of ultimately not working. As in, the entry might work for a second, but then it might come back down and go. The overarching setup has a high chance of working, but each individual entry attempt might not have a high chance of working. But each individual entry attempt does have an ultra high chance to get me at least break even. And what does that do for me? That allows me to go break even on probably a couple attempts on an overarching high probability setup. One of them is going to work. I could void all the attempts that got broken even because they're break even, they're not a loss. And now I get to play the overarching setup success rate, which might be 70%, with ultra high risk reward. Now I have, every once in a while you're going to get stopped out. So if the overarching setup is 70%, now you have a 65% 15R setup. If you can't make millions of dollars a year, if you can't make tens of millions of dollars a year with a 65% 15R setup that shows up every fucking day, stop trading. So this begs the question, how can you optimize for the chance to go break even on a particular trade? Now, I'm not going to go into full detail in this video, but I will give you some pointers. If you want to learn in full detail, you're going to have to join my Discord. Why do I put this stuff behind a paywall? Because this is my real trading edge. And if it gets out to too many people in the public and it stops working, I'm going to lose out on fucking millions of dollars a year. So shut the fuck up. Pay the $30 if you want to learn it. If you don't want to learn exactly how I trade, then don't pay the $30. That's okay. I don't care. I'm not putting it out fully in the public because everything that has a real edge, if it goes to the public, it's going to fucking stop working. It's going to stop working. If too many people see it, if hundreds of thousands of people see it, it's just gonna, the edge is no longer gonna be there in any sort of real way, and I'm scared of that. And the reason I'm scared of that is because I make millions, tens of millions of dollars a year from trading, and if that goes away, I'm fucked. I mean, I could retire. I'll just leave. I'll retire. But this is why I paywall in, and this is also why I let my YouTube channel die every once in a while. I don't want to be big. I don't want to have a big fucking audience. I don't even want really people here, bro. Don't share this video. You know, I want to maintain about 200 people in the Discord. That's what I want to do. Because I'm worried that one day all this shit will just stop working. Okay? If too many people learn it. And maybe that's a rational fear. I doubt that the markets will change if 10,000, 50,000 people see it, but I don't want to be big. Okay? But I will give you tips, okay? And the reason I'm even putting any of this out anyways is because one day I'm going to quit trading. And I made so much fucking money trading. I don't need to do this shit, bro. I don't need to make YouTube videos. I don't need to do anything. If you knew my backstory, you would know that I never even wanted to teach trading, man. I'm literally here because fucking I felt like I had to be here. But I'm here now, and one day I'll quit, and one day I'll leave the internet. And hopefully I leave the internet with some information that can help somebody achieve even a fraction of the success, even 1% of the success that I've had in the market. And this mindset has highly helped me. Okay, so enough ranting. What are some ways that you can improve the chances of going break even? First and foremost, something that I already have on this YouTube channel, ATT. If you're trading in line with ATT, after ATT numbers, when you're pretty sure that you've created a high, a swing high, or a swing low at the ATT number, that's going to increase the chance of at least a little expansion, which can give you enough time to at least get break even on the particular trade. Okay? Secondly, high time frame levels marked correctly. What am I talking about? High time frame levels. Like, use high time frame levels. High time frame levels are going to have the most importance and relevance on the chart. I don't care if you come to me and you're like, well, look at this 1 minute order block and this 1 minute fair value. Shut the fuck up. I don't care. I don't care. Okay? Respectfully, I'm not going to take any fucking advice from anybody who's doing worse than me. Ever. I'm sorry. With the exception of people who have been doing this for 10 plus years profitably. I will take their advice. I'm not going to take your advice, Mr. Commenter on YouTube. So no, I'm not going to be using 5 minute, 15 minute, 1 hour levels. You'll never see me do that. High time frame levels in the market, in my experience, have the most relevance to intraday price action and cause reactions consistently. So if you have ATT, if you have high time frame levels, if you have the correct time of day, if you're trading outside of a choppy range, then every entry you take all of a sudden has a much higher probability of at least offering a little bit of a bounce, at least putting you a little bit into profit to where you have a chance to go break even. Now, for this way of trading to work, you also need to optimize your entries to the point where almost all your entries that work are borderline to the tick. Okay, you get filled borderline to the tick or very, very close to where the low or the high forms. Now, if you're horrible at optimizing your entries, I don't know what to say to you. I'm very good at it. In fact, I've never existed in a space where I wasn't good at optimizing my entries. So, to be honest, I can't even relate to you. I'm sorry. I know how to get very good entries that are very, very tight stop loss, that are very, very accurate entries. That doesn't mean that that particular entry is going to lead to the overarching setup expansion, but it means that at least it's going to give a reaction. And once you optimize your stop loss, you have big risk reward on an overarching setup that has a high likelihood of playing out. Now you have a very high win rate, very high risk reward setup, and that's the golden ticket, fellas. That is the golden ticket. If you can achieve what I've done, that's the golden ticket. That is where my edge comes from. You want to know where my edge comes from? This is my edge. You don't need to learn my fucking strategy anymore, bro. Of course, you might want to learn how I mark levels and how I actually optimize these entries and things of that nature. Again, you could join my Discord for that. But this is my edge. My edge is getting exposure to positions that are high success rate overarching setups with tight stop losses so I could have very high risk to reward, very high win rate trading. And I almost never have losing days. I lose trades all the time. I've lost a trade every single day this week. I've also made $100 this week. So hopefully this helps somebody. I'm not saying you have to implement this either, but take what I'm saying seriously and at least consider it. If you're struggling or if you find yourself hitting limitations in your day trading.